NASDAQ up almost 29% for the year. Gold up over $600, just about $600 this year. As we went on the air, it's at 2,623. And again, it was a golden year for gold. Not to the markets. Big year for the markets. Let's see. The S&P was up 23% this year. Yeah, isn't that wonderful? Up 23%. Aren't you all happy? Yeah, 3 companies own 88% of it.
In today's episode, Gerald Celente highlights a series of robust market gains and cautions that these movements don't necessarily translate into prosperity for the average person. He observes that the S&P 500 has posted significant growth over the year, and both the Dow and NASDAQ have followed suit. Yet, while these high-level numbers appear promising, Celente stresses that Wall Street's success often feels disconnected from the reality on Main Street. According to him, the wealth generated at the top continues to concentrate in a handful of corporate juggernauts, signaling a widening gap between stock market triumphs and everyday economic well-being. Celente's forecasts also touch on the real estate sector, emphasizing that despite rising interest rates, housing prices haven't fallen as some initially predicted. Citing supply and demand imbalances, he points out that pending home sales have been on the upswing for consecutive months. He suggests that even with tighter lending conditions, the sheer lack of inventory continues to prop up prices. This scenario, he warns, could lead to persistent affordability challenges for prospective buyers, as well as ongoing uncertainty for those looking to move or refinance in the year ahead. Finally, Celente warns that rising consumer debt, particularly credit card defaults, could pose yet another challenge in the coming months. He points to the increasing number of Americans who are falling behind on payments, a trend that may grow if personal finances continue to tighten. Coupled with the prospect of continued shifts in interest rate policy, he advises viewers to remain vigilant and well-informed. While certain sectors might continue to thrive, Celente underscores the importance of taking a measured approach to both personal and business financial decisions in this uncertain environment. But before we dive into more clips, make sure to smash that subscribe button and check our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest and most reliable service out there. Just a few clicks secures your data and keeps unwanted eyes at bay. Plus, if you're a stacker seeking truly independent market insights, visit goldsilverstacks.com for our Stacker's Handbook loaded with strategies to safeguard your financial future so you don't rely on commentators for market insights. Enjoy the episode.
Not to the markets. Big year for the markets. Let's see. The S&P was up 23% this year. Yeah, isn't that wonderful? Up 23%. Aren't you all happy? Yeah, 3 companies own 88% of it. BlackRock, Vanguard, State Street, America, the fascist country of the West. Yeah, according to Mussolini, the merger of state and corporate powers. 3 companies. As I said, all we are plantation workers of Slavelandia. The billionaires just keep getting richer, keep stealing all our dough. So today the Dow is up just 29 points. The S&P was up a bit, 0.43. NASDAQ, or down, excuse me. They were all down a bit. The NASDAQ was down almost 1%. And what else? The Dow's up 12.8% for the year. NASDAQ up almost 29% for the year. Gold up over $600, just about $600 this year. As we went on the air, it's at 2,623. And again, it was a golden year for gold. Bitcoin, what a boom year. Woof, woof, woof. It's at 93,540 bucks. And on the Brent crude side, it's up a little bit, but it's about almost $75 a barrel for Brent crude, but it's down 3% for the year. And that brings you back to the big story. The markets, Wall Street, have nothing to do with Main Street. They're just the white shoe boys. That's right. Better than me and you. You're nothing but a piece of Shut your mouth. You only talk to the president. You only have power in Congress if you got money. You got it? Only by the facts. Hey, how many billionaires did Trump bring into his office? Was it 13 or 14? Hey, I'm Musk. I can say anything I like. I got all the money. I'm a billionaire. I own the world. Let them eat cake. That's right. The plantation workers of Slavelandia. And by the way, on Thursday, which is 2 days away, we're going to come out with our top trends for 2025. Yep.
In today's news recap, silver price surge expected in 2025 as UBS predicts $38 target amid industrial strength. UBS anticipates silver prices climbing to $36 to $38 per ounce by 2025, driven by falling U.S. yields, robust industrial recovery, and stronger demand. Despite recent headwinds, the metal's dual role as precious and industrial could fuel its growth. According to investing.com, silver prices are expected to increase in 2025, according to UBS, which is boosted by lower real rates in the United States and higher global industrial production. This is despite the fact that the metal is struggling to match the increases spurred by the central bank in gold. Silver prices increased by more than 20% in 2024, but they have recently lost impetus as a result of increasing yields in the United States, a strong dollar, and growth concerns in global markets. With speculative short positions expanding and ETF holdings stabilizing following major outflows earlier this year, the metal is trading near its 200-day moving average. This represents a positive development for the market. In spite of these difficulties, UBS continues to retain its positive stance with a target price range of $36 to $38 per ounce for the year 2025. Although rising yields have been a disadvantage, a decrease in yields might potentially improve the desirability of silver. There is a need for a shift towards cyclical commodities, which UBS anticipates will become more prevalent as the year 2025 progresses. Dual roles of silver highlight its market potential. Despite the fact that silver's association with gold continues to be high, the fact that it also moves in tandem with industrial metals highlights the fact that it serves a dual purpose as both a precious metal and an industrial metal. Now we'll show you the best clips of the latest interview where Holter talks about his price predictions, but first, smash that subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than the cost of a Financial Times paper, you can protect your online activity from prying eyes with the most reliable VPN on the market. Trust me, the only thing you'll regret is not getting it 6 months ago. Enjoy the episode.
When they started raising interest rates, the mainstream business media all said home prices would go down. We said, no, they're not. Nope. Supply and demand issue. And demand is still there. Supply is short. Pending home sales in the U.S. grew for the fourth straight month in November to return to the highest level since early 2023, according to the National Association of Realtors. It increased 2.2% last month. And cuts by the Federal Reserve to its benchmark interest rates haven't substantially eased mortgage rates. That's right. And it's still going up. So what's going to happen? Up, one of the wild cards. That's right. We're going to be writing about it in your top trends where interest rates are going to go. Yeah, wild card. The joke is wild. Year of pain condemns French stocks to worst showing since Eurozone crisis. Huh. The Paris CAC 40 index has fallen 3% this year. Why? Will it get worse? And there are a lot of implications about this. That little Catson Macron with a little fake hair and a little dick about the size of this. Yeah, a little shithead running the country. Hey, how about the little Trudeau up in Canada? Another little daddy's boy, little daddy's boy. Yep. One little clown after another running a country near you. This is going to get a lot worse, and it's going to look at our top trends. The United States economy is doing better than most of the world. And what's going to happen with Trump? It's in your trends journal. That'll be out on Thursday. High interest rates blamed for surge in defaults of leveraged corporate loans. This is from the Financial Times yesterday. Defaults in global leveraged loan market, the bulk of which is in the U.S., picked up to 7.2% in the 12 months to October, as high interest rates took their toll on heavily indebted businesses. The office building bust is going to be the wild card that's dealt this year. One after another, they're going to be defaults on loans. Watch what happens, and then watch the implications. U.S. credit card default loans jump. Oh, yeah. Defaults on U.S. credit card loans have hit their highest level since the Panic of 08. Yeah. Plantation workers of Slavelandia. Oh, and all the news is that Carter died. Carter died. Oh, Carter that with Brzezinski gave us the Mujahideen that became Al-Qaeda. Oh, that Carter that we love. Oh, the Carter that did away with the usury laws so the banks, the bandits can make all this money. Hey, don't let the mafia make 10%. Let the banks, the bandits make 23% on your average credit card. Bring it up to 39%. Jimmy Carter. Oh, the Carter, the guy that deregulated the airline industry to allow the bigs to own everything, and that arrogant little I'll never forget it, Alfred Kahn, a little con man. Oh, I'm from Cornell University. He was the that deregulated the airline industry. We had, Mohawk, Allegheny, Eastern, Pan Am, Northwest, one airline. And when airlines used to be a flying sensation, and now they're just because of that Carter that everybody's bowing down to.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.